Did you know a single trade could make you a millionaire overnight? Or wipe out your savings in seconds? Welcome to the wild world of the stock market, where fortunes are made, lost, and remade faster than you can say bull run. Today, we're diving deep into the 4 biggest strategies shaking up the financial markets: options trading, intraday trading, swing trading, and long-term investing. By the end of this video, you'll know exactly which one could be your ticket to financial freedom or your biggest regret. Stick around, because I'm about to reveal secrets Wall Street doesn't want you to know. Here's the big question. Why do some people turn $1,000 into millions in the stock market, while others lose it all chasing the same dream? It's not just luck. It's not just money. It's strategy. The financial market is like a battlefield, and if you don't pick the right weapon, options, intraday swing, or long-term, you're going to get crushed. Each of these strategies has its own rules, risks, and rewards, and choosing the wrong one for your personality could cost you everything. So, what makes these approaches so different, and why do some traders swear by one while others call it suicide? Let's unravel this mystery step by step, and trust me, you're in for some jaw-dropping surprises. First, let's talk about options trading. Imagine you're at a casino, but instead of betting on red or black, you're betting on whether Apple's stock will skyrocket or crash by next week. Options trading is like that. It's a high-stakes game where you're not buying the stock itself, but a contract that gives you the right to buy or sell it at a specific price later. Sounds simple, right? Here's the catch. Options expire. If you're wrong about the stock's direction, or even if you're right but you miss the timing, your contract becomes worthless. Poof, gone. But here's the wild part. A single options trade can multiply your money 10x, 20x, even 100x in days. In 2020, a guy named Keith turned $2,000 into $1.2 million in just 6 weeks trading Tesla options. Sounds like a dream, right? But wait, 95% of options traders lose money. Why? Because it's not just about picking the right stock. It's about timing, leverage, and nerves of steel. One wrong move, and you're out. So, why do people keep diving into this roller coaster? Let's break it down. Options trading is like piloting a fighter jet. It's fast, it's thrilling, and one tiny mistake sends you crashing. You're using leverage borrowed power to amplify your gains, but that also amplifies your losses. Picture this. You buy an option for $500 that controls $50,000 worth of stock. If the stock jumps 10%, you could make $5,000. But if it drops 10%, your $500 is gone. And here's the first shocker. Most options expire worthless. Studies show 70 to 80% of options contracts never get exercised. That means the majority of traders are just burning cash. So why do people do it? Because the potential payouts are insane. In 2021, a Reddit user posted about turning $10,000 into $7 million on GameStop options during the meme stock frenzy. But for every success story, there are thousands who lose it all. Are you ready to roll those dice? Now, let's shift gears to intraday trading. This is the Wild West of the stock market. Intraday traders, day traders buy and sell stocks within a single day, sometimes in minutes or even seconds. They don't care about the company's long-term value. They're chasing tiny price movements, aiming to make a quick buck. Imagine you're a surfer riding a wave. You catch it, ride it for a few seconds, and jump off before it crashes. That's day trading. You might buy a stock at $100, sell it at $101, and repeat that 10 times a day. Sounds like easy money, right? Here's the twist. Day trading is a full-time job. You're glued to your screen watching charts, news, and level 2 data like a hawk. One distraction, and you're toast. And here's the second shocker. 90% of day traders lose money consistently. A 2019 study from the University of California found that only 1% of day traders are consistently profitable. So why do people keep trying? Because the adrenaline is addictive. Picture this. It's 9:30 a.m., the market opens, and you're watching Tesla's stock tick up and down like a heartbeat. You buy at $800, sell at $805, and pocket $500 in 10 minutes. Your heart's racing, your palms are sweaty, and you feel like a Wall Street god. But then, a tweet from Elon Musk tanks the stock, and your next trade wipes out your gains. Day trading isn't just about skill, it's about discipline. You need a system, a strategy, and the ability to walk away when emotions take over. Most people can't. That's why day trading is like playing poker with the pros. You might win a hand, but the house usually wins now. Let's talk about swing trading. This is the middle ground between the chaos of day trading and the patience of long-term investing. Swing traders hold stocks for days, weeks, or sometimes months, aiming to catch swings in the market. Think of it like fishing. You cast your line, wait for the right moment, and reel in the catch. Swing traders use technical analysis, charts, and patterns to predict where a stock is headed. For example, you might buy a stock at $50, wait for it to hit $60, and sell. Sounds straightforward, right? Here's the surprise. Swing trading requires less time than day trading, but it's not as easy as it looks. You're still exposed to overnight risks, news, earnings reports, or global events that can tank your stock while you sleep. In 2022, a swing trader on X posted about losing $50,000 overnight when a biotech stock crashed after a failed drug trial. Ouch. But swing trading has its fans. Why? Because it's less stressful than day trading and offers bigger gains than long-term investing. You don't need to watch the market every second, but you still get the thrill of active trading. Picture this. You spot a chart pattern called a cup and handle on Nvidia's stock. You buy at $300, hold for 2 weeks, and sell at $350. That's a 16% gain in half a month. Not bad, right? But here's the catch. Swing trading requires you to be a market detective. You need to understand trends, resistance levels, and momentum. And even then, you're not safe. The market doesn't care about your charts. One bad trade can wipe out weeks of gains. So, is swing trading the sweet spot, or just a trap for overconfident traders? Finally, let's talk about long-term investing. This is the strategy your grandpa probably loves. Buy good companies, hold them for years, and let time do the magic. Think Warren Buffett, who turned $10,000 into billions by holding stocks like Coca-Cola and Apple for decades. Long-term investing is like planting a tree today and enjoying the shade in 20 years. You're not chasing quick wins, you're betting on the future. Sounds boring, right? Here's the third shocker. Long-term investing isn't as safe as you think. In 2008, the stock market crashed 50%, and even safe stocks like General Electric lost 80% of their value. If you panic and sell at the bottom, you're done. But if you hold through the storm, you could come out richer than ever. Long-term investing is all about patience and research. Imagine buying Amazon stock in 2004, $50 a share. Today, it's worth over $3,000. Adjusted for splits, that's a 60x return. But here's the problem. Most people don't have the discipline to wait. They see a 10% dip and panic, or they chase hot stocks and buy at the peak. Long-term investing sounds simple, buy and hold, but it's psychologically brutal. You're fighting fear, greed, and the temptation to time the market. Plus, you need to pick the right companies. Enron looked like a winner in 2000 until it collapsed in a massive fraud scandal. So, is long-term investing the path to wealth, or just a slow grind that tests your soul? Now, let's compare these strategies head to head. Options trading is high risk, higher reward, like betting on a horse race. Intraday trading is fast and furious, demanding constant attention. Swing trading offers a balance, but you're still exposed to market swings. Long-term investing is slow and steady, but you need ironclad patience. So, which one's right for you? It depends on 3 things: your risk tolerance, your time, and your personality. Are you a thrill seeker who can handle losing it all? Options or day trading might be your game. Prefer a slower pace with less stress. Swing or long-term could be your fit. But here's the secret Wall Street won't tell you. No strategy guarantees success. The market is a beast, and even the pros get humbled. Let's talk about the tools you need to succeed, no matter which strategy you choose. First, you need education. The stock market isn't a casino. You can't just wing it. Learn technical analysis for day and swing trading. Understand fundamentals for long-term investing. And master options pricing if you're going the derivatives route. Second, you need a plan. Without a trading plan, you're just gambling. Set your entry and exit points. Stick to them. And never risk more than 1 to 2% of your account on a single trade. Third, you need discipline. Emotions are your worst enemy in the market. Picture this. You're up $10,000 on a trade, and greed tells you to hold for more. Then the stock crashes, and you lose it all. That's why pros use stop-loss orders and take profits systematically. Now, let's talk about the biggest mistakes traders make. Number 1, overtrading. Day traders especially fall into this trap, making 50 trades a day and racking up fees while chasing losses. Number 2, ignoring risk management. If you bet your whole account on one trade, you're asking for disaster. Number 3, following the crowd. In 2021, thousands of traders piled into meme stocks like AMC, only to watch them crash when the hype faded. The lesson: don't be a sheep. Do your own research, trust your own analysis, and ignore the noise on social media. So, what's the secret to success in the financial market? It's not about picking the perfect strategy, it's about mastering yourself. The market will test your patience, your discipline, and your courage. Whether you're trading options, day trading, swing trading, or investing for the long haul, the real game is mental. Picture this. It's 3 a.m., you're staring at a losing trade, and panic is creeping in. Do you sell? Do you double down? The traders who win are the ones who stick to their plan, no matter what. They don't chase losses. They don't get cocky. After a win, they play the long game. Because in the market, survival is success. Here's one final story to tie it all together. In 2019, 23-year-old named Sarah started with $5,000 in her trading account. She tried day trading, lost half her money, and almost quit. Then she switched to swing trading, studied chart patterns, and built a system. By 2023, her account was worth $200,000. But here's the kicker. She didn't stop there. She took her profits and started investing long-term in index funds. Building a portfolio that's now on track to hit $1 million by 2030, Sarah didn't pick one strategy. She adapted, learned, and grew. That's the real secret of success. So, where do you start? Pick one strategy that matches your lifestyle. If you've got time and love a challenge, try swing trading. If you're patient and want stability, go long-term. If you're a risk with nerves of steel, dip your toes into options or day trading, but start small. Whatever you choose, educate yourself. Make a plan, and stick to it. The financial market isn't a get-rich-quick scheme, it's a get-rich-smart game. If you found this video eye-opening, you won't believe what I'm covering next. The one stock market hack that could double your returns in 2026. Hit that subscribe button, turn on notifications, and drop a comment below. Which strategy are you trying? First options, intraday, swing, or long-term? Let's talk about it. See you in the next one.